takes us to our talk of the tape, the changing makeup of this market and the stock likely to lead that next leg higher if, in fact, one happens. Let's ask Josh Brown, co-founder and CEO of Ritholtz Wealth Management, here with me at Post 9. It's good to see you again. The moves that you've made in the market of late and the commentary that you've given me lately suggests that momentum is a place that you want to avoid right now, and you're looking elsewhere.
Well, I think the way I would phrase that, Judge, is former momentum. So the tricky thing about momentum is you have to measure it on a specific time frame, and you have to do that consistently if you're trying to define it. It's a little bit easier for me because I don't have to do that. I'm not running a rules-based momentum ETF, for example. So we've got a lot of big technology names that were momentum. Now I would consider them to be former momentum. And you can see that there are technical breakdowns happening in that space. And one of the things I've been coming on the show each week to say is, give me anything but big cap tech, anything but Magnificent Seven. I want to hear about it.
Even as you're a holder of NVIDIA and I think Alphabet and some of these names too. You like a lot of these.
That's right.
Apple.
Nothing wrong with these companies, but when we're talking about the current setup, those are the stocks to me that look the worst. I've seen nothing but unbelievable charts all over the market. I just don't see them in mega cap tech. NVIDIA's been incredible. Put that one aside. It's almost in its own solar system.
Is this a breather for these stocks, or is it a real trend change? Because you look at that kind of stuff too.
Tesla's a trend change. Tesla is now lost $500 billion in market cap. That's not a breather, okay? Apple, I think, is innocent until proven guilty. Microsoft, too. Meta really hasn't let up yet to the upside. So, yeah, I think it's more reasonable to say these stocks have done a lot of the heavy lifting for the indices. The money is coming out of there and looking to go elsewhere. Perfectly natural, perfectly normal, par for the course for a standard bull market. And, Judge, I want to tell you, we have a few milestones that we're celebrating right now that not a lot of people are even aware of. First of all, the S&P 500 has now gone 265 straight sessions without a drop of 2% or more. That is the longest streak, second longest streak since 2018. We had one of these streaks last year, too. You've got a VIX that's sub 20 for 96 consecutive days. This is the second longest streak since 2018 as well. This is a market that really has not rewarded people for jumping out the window every time, for example, an inflation print came in hot, or every time a large important company missed on earnings. You have gotten absolutely no quarter if that's the way you've been trading. The people who are being rewarded the most right now are the people who have managed to ignore macro and focus on trend. And trend is higher, and there's been almost no volatility in sight. Last thing I want to tell you, this 2-year, 10-year yield curve spread, it's now 424 consecutive trading days inverted. That is officially the longest inversion ever for the 2s, 10s, even surpassing 1978 to 1980. We're in uncharted territory on that metric as well. No recession in sight, no slowdown in sight, and it's well over a year and a half with that inversion in place. So it's a really interesting environment. The people who are thriving right now are not buying the broken momentum. They're not looking at what's the next tech stock I can add. They're looking at areas like home building. They're looking at quick service restaurants. They're looking at really a lot of consumer areas like travel, and they're finding charts that are working.